Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Wednesday, March 5th, 2025. This is Nelson John. Let's get started. India's steel industry was gearing up for major expansion, confident in its growth trajectory. Manufacturers were investing in capacity, expecting stable demand and fair competition. Then came in the tariffs. The US imposed fresh tariffs, 25% on steel from Mexico and Canada, and a doubling to 20% on Chinese imports. This made Chinese steel exports to the US unviable, threatening to flood India with cheap surplus steel, due to which Indian steelmakers face a new crisis. Karan Pahuja, former president of the Indian Stainless Steel Development Association, warns, quote-unquote, India becomes the natural target for Chinese steel at the worst possible time. Falling prices and shrinking margins loomed large. As a result, some saw opportunity. With uniform US tariffs, Indian steel could gain a competitive edge, says Abudai Jindal, MD of Jindal Steels. But he warns of a new threat. Excess steel from Korea and Japan could also flood India. The industry has turned to the Indian government for protective measures. Now, India's steelmakers have braced for a new battle, one that could redefine the industry's future. BSE Limited stock plunged 20% after SEBI released a consultation paper on February 24th, raising concerns over potential declines in trading volumes. But is the panic justified? A closer look suggests that the impact may not be as severe as feared. At the heart of the issue is SEBI's proposal to change how open interest is calculated in index derivatives. The new method, which shifts to a delta-based future equivalent system, aims to reduce systematic risks. However, SEBI's own data shows that in 89% of the cases last November, the proposed limits wouldn't have been breached, indicating fears might be overblown. Another key change targets non-benchmark indices like Nifty Bank. SEBI wants derivatives limited to broad-based indices with at least 14 constituents, capping the top stocks' weight at 20%. This move aims to curb price manipulation by big players. Exchanges could simply tweak index composition to comply, making a drastic impact unlikely. In single-stock derivatives, SEBI is adjusting position limits, which may only affect a few low-liquidity stocks. After 4 days of losses, BSE shares rebounded 2%, suggesting investors are reconsidering the initial panic. With a P ratio of 40x, BSE remains a strong player in a duopoly market. Adani Wilmar, which focused on essentials like edible oils and grains, is now steadily growing its footprint in Indian kitchens. Many households relied on its Fortune and Kohinoor brands, while the company looked for ways to expand into high-margin packaged foods. Adani Wilmar struck a deal to acquire GD Foods, the maker of Tops, ketchup and noodles, in a 603 crore rupee transaction. The move aligned with its 1,000 crore rupee war chest for food sector acquisitions. The company secured a stronghold in the processed foods market, gaining access to Tops' sauces, jams, noodles, and instant mixes, along with a retail presence in 150,000 outlets across North India. Adani Wilmar's MD, Anshu Malik, reaffirmed the company's commitment to expanding Tops distribution and investing in the brand. The market needs trusted FMCG brands that deliver high-quality, affordable products, he said. Adani Wilmar positioned itself as a strong competitor to Marico, ITC and Tata Consumer Products, solidifying its place in India's evolving packaged food industry. The company has been gearing up to make the brand Tops a household staple in India. There was a time when India's IT giants, TCS, Infosys, HCL Tech, Wipro and Tech Mahindra were powering global businesses with steady revenue growth from banking, healthcare and tech clients. These firms help the world's biggest banks and companies run operations smoothly, handling everything from cloud computing to AI-driven automations. Now, these firms are facing a fresh wave of uncertainty. With major US banks, their biggest clients, putting tech spending on hold, concerns are growing over how the sector will fare in the next financial year. Analysts at JM Financial and Kotak Equities have flagged red signals. Uncertainty has crept in. Trade war seems imminent, says JM Financial's Abhishek Kumar and Nandan Arekal. They pointed to fears over inflation and the US imposing new tariffs on China and Mexico, which could slow down IT demand. Banking, a key revenue driver for the Indian IT sector, accounted for nearly a third of the business for TCS, Infosys, and Wipro last quarter. A spending slowdown here could derail the industry's already modest growth trajectory. Meanwhile, Capgemini's recent revenue dip has added to the gloom. The French IT firm sees zero organic growth this year, hinting at broader global struggles. Kotak analysts believe growth in FY26 may be slightly better than FY25, but still below normal levels, citing weak discretionary spending and disruption from AI adoptions. The road ahead? Tough. NASSCOM expects India's IT revenue to cross $300 billion next year, but analysts warn that achieving this won't be easy amidst the economic headwinds and AI-driven pricing pressures. India's market regulator SEBI has launched a digital assistant, Mitra, to help investors claim old, forgotten mutual fund investments. Many pre-2006 mutual fund accounts opened before PAN was mandatory have since gone dormant, leaving millions of folios unclaimed. Now, Mitra, built by registrars KFin Technologies and CAMS, enables investors to track down inactive mutual fund folios using details like name, phone number, email, or bank account, beyond just PAN. This is crucial given that over 7.5 million inactive folios exist today. To use Mitra, investors will have to visit mfcentral.com, enter their details, and verify via OTP. The platform then scans databases for matching folios, allowing users to update KYC and reclaim funds. Up to 25 searches per user ensures ample chances to locate investments. While Mitra simplifies fund retrieval, challenges remain. Verification can be tricky for folios with outdated contact details. Experts, however, see this as a game changer. It's a much-needed tool to consolidate scattered investments, says Abhishek Kumar of Sahaj Money. Currently in beta, Mitra marks SEBI's latest push to safeguard investor interest and modernize financial tracking. For those unsure about old investments, Mitra could be the missing link to the lost wealth. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a wonderful Wednesday.